Finance YouTube, a space that's riddled with clickbait thumbnails, predictions for the market, financial advice that's apparently not financial advice, and of course the sketchiest brand deals you've ever seen. I don't watch a lot of finance YouTubers anymore, despite being a personal finance YouTuber myself, and today I'm going to be explaining why that's the case, and why listening to finance YouTubers could potentially be the worst decision of your life. I'm not kidding. The first issue with finance YouTube that I want to talk about is their predictions. I'm referring to how finance YouTubers will often make their own predictions about financial related topics, such as where they think the economy is heading, if the stock market's going to go up or down, and what stocks are going to skyrocket in price this year. And some of these predictions that finance YouTubers make can be a big problem, because certain predictions, such as what stocks are going to 10x in price, can really influence what their audience does with their money. You see, many consumers of finance content on YouTube have little knowledge about finance. They're watching these videos to try and better themselves and make smarter financial decisions. So they look to their favorite successful finance influencer for advice on what to do with their money. For example, if a person that's new to finance is wanting to get started investing in the stock market, they probably won't know what to invest in. So they might watch a video like the best stocks to invest in for 2023. Then they might actually go and buy all of the stocks mentioned in that video. And honestly, I wouldn't be surprised if buying stocks that YouTubers tell you to buy is actually a common investment strategy for a lot of people today. But doing this can be a very bad idea because, to be frank, most YouTubers don't know what they're talking about. They're usually just good communicators that do a great job convincing their audience that they do know what they're talking about. I decided to test out this theory of whether or not it's a good idea to buy stocks recommended by finance YouTubers. The idea I had was to go back and find old videos made by big finance YouTubers where they make their own stock picks and predictions based off of their supposed due diligence. I figured now that a couple years have passed from the time that they made these stock picks, we can go and see how these stocks actually performed over the last couple of years for real, and see if the stocks lived up to the hype made by finance YouTubers. To start things off, I found this video called The Best Stocks of 2021 from Andrei Jikh, who I would say is probably the second biggest finance influencer on YouTube, after Graham Stephan. In this video, Andrei is recommending you buy the stocks Chevron, Exxon, Square, PayPal, Shopify, and Coinbase. Now that 2 years have passed since Andrei made this video, we can see how well these stocks actually performed. I downloaded the price data for each of these stocks, did a few calculations, and worked out that since January 2021, which is when Andrei uploaded the video, the stocks he picked returned the following: Chevron 111%, Exxon 146%, Square minus 71%, PayPal minus 70%, Shopify minus 68%, and Coinbase minus 85%. Overall, if you had invested in these stocks equally when Andrei recommended them, you would have made a return of minus 5% over the last 2 years. And if we compare the return of Andrei's stock picks to the return of the S&P 500, aka the broader stock market, you can see that the S&P 500 outperformed Andrei by a fair amount with a return of 3%. But I get it, you might be thinking minus 5% is not terrible. That's not going to destroy you financially or anything. But there are a lot more YouTubers with far worse stock picks. I decided to repeat the same analysis with other large finance YouTubers that made stock pick videos 2 years ago, and the results were pretty shocking. Jeremy from Financial Education made a video recommending you buy 5 different stocks with predictions that some of these stocks would increase in price tenfold. The stocks he recommended were Tattooed Chef, surprise, surprise, Walgreens Boots Alliance, MicroStrategy, Dropbox, and Shopify. The returns for these stocks are as follows: Tattooed Chef, minus 95%, Walgreens Boots Alliance, minus 26%, MicroStrategy, minus 77%, Dropbox, minus 1%, and Shopify, minus 68%, with an average return of minus 53%. So for someone that actually sells memberships to his own private stock group, this isn't really the best look. It turns out his group probably isn't the blueprint to long-term investing success. It's more like the blueprint to losing half of your investment. The last YouTuber stock picks I analyzed were from StockMo. He made a video recommending you buy 3 different stocks: Rocket, NIO, and Tesla. Now I want to ask you, how do you think a mortgage lending stock that was recommended at a time of record low mortgage rates and 2 overly hyped pandemic EV stocks actually performed over the last 2 years? The answer is shockingly bad. Rocket returned minus 67%, NIO minus 83%, and Tesla minus 53%. Averaging a return of minus 68%. When you compare these returns to the return of the S&P 500, which was 3%, it isn't looking too great for these guys. And I don't know about you guys, but I would expect YouTube channels that are literally called Financial Education and StockMo to not recommend stocks to their audience audience that have more than halved in value in just 2 years, despite the broader stock market return being positive over the same period. There are likely thousands of people that follow these YouTubers' advice and would have paid the price for doing so. So I guess my recommendation for you is to at least do your own research before listening to a YouTuber, because as that scene in The Wolf of Wall Street goes, No, not that one, this one.
Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
I think the only thing I'd change about that scene is Matthew McConaughey saying no one knows what a stock is going to do, least of all stockbrokers, when he should have said least of all finance YouTubers. And to clarify, I don't think that all predictions or recommendations about stocks or the market are bad. You can give your take on the economy, just make sure that it's clear that it's solely your opinion and not coming from a place of authority. I even think it's okay to give recommendations on what to invest in, but you have to be careful here. For example, I make videos recommending specific index funds, but these are diversified investments that have been proven to create wealth for millions of people over a long period of time, as opposed to trendy pandemic stocks, which are apparently proven to destroy your wealth in a short period of time. Another big problem with finance YouTube is that creators are rewarded for playing into the whole YouTube game. This means creating videos with crazy clickbait titles and thumbnails and talking about whatever is trendy at the time because it gets the most amount of clicks and attention. And to be honest with you guys, I've played into this a little as well, and I want to share the results because it is very interesting. I made a video a little while ago about what lessons we investors can take away from the FTX disaster. I was going to title the video something along the lines of what investors can learn from the FTX disaster. That's a title that best describes the content I covered in my video. But right before uploading my video, I saw some other finance YouTubers upload videos with the most absurd amount of clickbait in their titles and thumbnails, and I kind of thought, you know what, why don't I instead change the title to Just Lost Everything in FTX, What Investors Can Learn. It's kind of clickbaity, right? Because it makes you think that I lost all my money in FTX, but then it allows me to kind of defend the clickbait by saying, oh no, I didn't lose my money in FTX. I was referring to the people that lost their money in FTX. So anyways, I went with the more clickbait approach. And for the video thumbnail, I used a picture of Sam Bankman-Fried with laser eyes surrounded by lots of flames, and a fake tweet where he says funds are frozen, similar to what a lot of other finance YouTubers do. And here's the crazy thing. I was actually somewhat nervous about uploading the video because I figured I would get some backlash in the comments calling me out for the clickbaiting and stuff. And it made me think, I bet the reason no one called me out for clickbaiting is because people on YouTube are already so accustomed to seeing clickbait in every video already that this was nothing new to them. And what shocked me even more about that video is that when I checked my YouTube analytics, I saw that the video had a click-through rate of around 12%. And this is actually the highest click-through rate I've ever received on one of my videos. So that proves that my clickbait was in fact successful at getting people to click. So this got me curious about which of my other thumbnails also had a high click-through rate. So I went through all of my videos and screenshotted the ones with higher click-through rates. And here they are. Do you see a correlation between them? Look closely. They all have flames. I guess it turns out that every time I put flames in my thumbnail, the video performs well. I like to think that the clickbait I use is in good taste still, but I do think that other finance creators that are playing the YouTube game are maybe taking it a little bit too far to the point that it can negatively affect the viewer. Take, for example, Graham Stephan, who mostly makes videos about financial news. Scrolling through his videos made in the last few months, we see the titles, "It Started, the Worst Housing Crash in 40 Years," "The Fed Just Crashed the Market," "Congress Wants to Ban Investing," "The Worst Economic Collapse is Coming," "Reset investing,"
It started,
"The next Fed just reset the over the housing market, the Fed just reset the market, recession canceled," and it goes on and on and on. And all of these videos about how the Fed just apparently crashed the market, oh wait, never mind, the recession is canceled, wait a second, now the Fed just reset the housing market this time? All of these titles just paint a really inaccurate picture of how the economy really is. In reality, whether it's the general economy, the stock market, or the real estate market, they're not even close to how hectic and flip-floppy Graham and other YouTubers make it seem, even during the more extreme financial climate of today. All these videos do is cause a lot of fear for his audience and make them feel the need to watch his videos as soon as possible because they don't want to miss out on potentially crucial new market news, when in reality, the news usually isn't crucial whatsoever. And I've noticed that his fans are just exhausted with this type of clickbait now. Also, saying things like the Fed just reset or flipped the market isn't even terminology people use in economics or finance. Finance professionals don't say to each other, "Hey Brad, did you just see that the Fed just reset the market?" Instead, they say, "Did you see that the Fed raised interest rates by 50 basis points today instead of our 75 basis point predictions, so we can expect the stock market to increase by maybe 2% today." Once again, if the only place you learn about finance is from YouTubers like Graham Stephan, I think you'll likely have a very unrealistic, overly dramatized outlook on how the economy is functioning. It clearly pays more for them to make scary, fear-mongering type videos than it does to make videos with useful advice. I miss the days when YouTubers like Graham Stephan made personal finance videos that actually helped people. Now it seems like they make nothing but fear-mongering videos that don't contain as much useful information that you can apply to your own finances. You don't exactly gain a lot by watching Graham read off random news headlines that are, for the most part, just clickbait themselves. At the end of the day, it all comes down to views, subscribers, and ultimately money. Which brings me to my last concern for finance YouTube, which is greed. Recently, we saw most of the big finance YouTubers get called out for promoting fraudulent companies like FTX, BlockFi, and established titles. And I think there's no other way to put it other than they completely sold out at the detriment of their own fans. I don't think there's anything wrong with trying to maximize the amount of money you make as a YouTuber. Do as many brand deals as you want, sell courses, as long as these products provide value to your fans in exchange. But when YouTubers promoted the crypto exchanges FTX and BlockFi, they went against their own advice. Some YouTubers went from calling crypto a speculative investment,
I'm not going to tell you guys to go and invest in Bitcoin. I'm never going to tell you guys to do something stupid.
to then doing FTX brand deals where they would literally promote buying NFTs to their fans.
Buy cryptocurrency and NFTs with no fees, use a crypto debit card, track their entire crypto portfolio.
When promoting these companies to their fans, they knew the risks involved. They knew that their fans' money was not FDIC insured. They ignored the warning signals, such as all the other crypto exchanges that went bankrupt, causing their users to lose money. And frankly, they ignored these warning signs and were okay with their fans taking the risks. And as a result, consumers of finance content on YouTube likely lost many millions of dollars of their own money. So to sum things up, I think it's a shame to see many of the finance YouTubers that I used to watch start to make less valuable content overall, and really just sell out at the expense of their viewers. That's not to say that they don't offer good advice sometimes. I still do think that most finance YouTubers offer pretty good advice overall, but I wanted to make this video to give my thoughts on how that's becoming less common now. I want the finance content niche on YouTube to keep growing because it can provide so much value to the people that were never able to receive a personal finance education in school or from their parents. But I'm worried about the way things are currently headed. I'm curious to know what your thoughts are on the state of the finance content here on YouTube, so please do let me know down in the comments below. I really would love to hear all of your takes. So that's it for the video. I'll see you in the next one.